Hello traders and welcome back to Explain the Charts. Today we're going to be breaking down the AUDUSD to understand what's going on in the market and what to look for moving forward. The Australian dollar has been trending upwards recently, hitting a 7-month high near 0.6800, but has since pulled back slightly to 0.6775, suggesting some hesitation in the market. Looking at the daily chart, we can see a clear upward trend over the past few months, with the AUDUSD breaking above key resistance levels around 0.6500 and 0.6600. The recent rally has been driven by a combination of factors, including the weakening US dollar, as concerns about an imminent recession have receded. Also playing a role is a broader recovery in risk assets, with the Aussie being a risk-on currency. However, the market seems to be pausing for breath as the US dollar has rebounded slightly, and the oil market continues to reflect concerns about lower global demand. Now, let's dive into the hourly chart to see if we can get a better picture of the current price action. If we look at the 1-hour chart, we can see a series of higher highs and higher lows, indicating a continued bullish bias in the short term. However, the recent price action has been characterized by a series of smaller candlesticks, suggesting that momentum may be waning. The AUDUSD has tested the 0.6798 level multiple times in recent days, which acted as resistance on the previous breakout. This suggests that this level could be a key price level to watch in the short term. Now let's zoom in on the 15-minute chart to see if we can identify any further clues about the current market sentiment. On the 15-minute chart, we can see that the AUDUSD has been consolidating within a narrow range for the past few hours, suggesting a lack of clear direction in the market. The price has been bouncing around the 0.6770 level, which appears to be acting as both support and resistance for the time being. We can see a clear break above this level with a large candlestick recently, so this level will be important to watch. If the AUDUSD can break above the 0.6798 level, it could signal a continuation of the upward trend in the short term. On the other hand, if the price breaks below the 0.6770 level, it could suggest a shift in sentiment and a potential downward correction. With the current economic conditions, there are several things to watch for that could reinforce the likelihood of a price move in either direction. For a continued bullish run, we'd need to see positive economic data releases from Australia and continued weakness in the US dollar. Also, a robust bounce in the commodity complex would likely benefit the Aussie. On the other hand, any negative news or data from Australia, such as a weaker-than-expected inflation report or an unexpected interest rate cut from the RBA, could put downward pressure on the Australian dollar. Also, a resurgence in U.S. economic strength or hawkish comments from the Fed could strengthen the U.S. dollar and lead to a decline in the AUDUSD. To sum up, the AUDUSD is currently at a crucial juncture, with the potential for a continuation of the upward trend or a downward correction. Key price levels to watch in the short term are 0.6770 for support and 0.6798 for resistance. A break above 0.6798 could signal a continuation of the upward trend, while a break below 0.6770 could suggest a downward correction. It is important to stay informed about the latest news and economic data releases from Australia and the US, as well as global risk sentiment, in order to make informed trading decisions. Remember, trading foreign exchange carries risks, so always ensure you fully understand the potential risks and manage your trades effectively. As always, happy trading! And please, don't forget to like, comment, and subscribe to Explain the Charts for more in-depth market analysis.